Everyone, markets and value. So today we're gonna look at Upstart, and things do not look great. Things look dire, like down 8% for today. And in the after hours, it is down 43%, which is, or just as like I'm gobsmacked. Like to be down that much. How bad was their first quarter? Like, was their first quarter that bad, or was the market's reaction just that big that it's kind of just shocked? Is the market shocked, or what's happened? So okay, so $77 for closing price, about 43 in the after hours. At 77, the closing value was 6.5 billion. And if we take off 43%, we're looking closer to 4 billion. Which is a massive drop. So we really have to dive into these results, and we have to go, were these results that horrible, or is the market's reaction that bad? So total revenue was 310 million. That's an increase of 156%. So in terms of results, it looks okay. The growth looks alright, looks pretty good in that sense. I think the one highlight was conversion rate on requests. Conversion on rate requests was 21% on the first quarter, and it's down 22% on the same quarter. So I think the market is interpreting that, hey, there's a kind of a drop in that conversion rate, so they kind of feel like business might be slowing down, which, it's, in a sense, they're not wrong. It does look like it's slowing down. Revenue expected for the second quarter 295 to 300 million, which looks alright. But I think net income could be negative to break even, so market may not be interpreting that one too well. But when you adjust it for the non-cash expenses, and they're actually up 28 to 30 million, so it doesn't seem too bad. Revenue for, I think the market's interpreting this number here and going, revenue is expected to be about $1.25 billion. And I think that's where the market's kind of looking at it and going, basically last year's revenue was 846 million, and if we go, this year is going to be 1.2. That's around about 50% growth. So I guess 50% growth is kind of a far cry from basically 156% increase for this current first quarter. So basically it's interpreting that things are going to slow down a lot more in the third and fourth quarter, which is basically, not ideal at all. Which probably means, it means significantly slower growth. I think that's the problem. I think, that's probably why it's down by a lot, because they're looking at 50% growth. And then if we go, what's a good multiple when it comes to a growth company that's sort of profitable at the moment? 1.25 billion. I'd say, even at 6 billion, it seemed like a fair valuation. Like, the company still merits like a good, high multiple on their sales. But apparently apparently this is just not the market to be slowing and underperforming. So I think the market's kind of a little spooked, got a little scared, and they're kind of retreating on the whole idea that growth is going to drop, especially when your first quarter was actually really good at 156%. But to say overall, once we average that down for the overall revenues, that it's going to be about 50% increase, then I think that's probably the problem. And then I think there was a part down here, overall, things look steady with the company. Its cash is around $1 billion in cash and restricted cash. If you add that together, you get $1 billion. I think there was net cash flow was negative 266 million, and that was because the purchase of loans held for sale was negative 443 million. So overall, they didn't like that. Of course, the market won't like that. So in terms of that, the conversion rate's lower, the growth was lower, and they were negative in the cash flow. So yeah, I think the market's interpreting that, and then they're not very happy in that sense. Though overall the market is red today, so that's that doesn't help it. But yeah, it can go both ways in terms of how you would do it as a multiple. But I think it's on the lower end. It starts to look undervalued at that stage. For a company that's looking at producing 1.25 billion revenue and only selling at just over a multiple of 3 times sales, it seems kind of low. Especially if the company is going to be growing at 50%. 50% is still a decent amount of growth. But I think also the market is probably interpreting that, hey, if your growth is dropping that much, potentially next year, what if you drop to 30%? Then we have problems. So then the market's just going a step ahead of everything and going, okay, we're going to lower the valuation immediately because we feel like things are going to continue to slow down. Which isn't ideal. It is a shocking drop, to see it drop that much. But I guess the market is slightly warranted in that sense. But I think at the same time, the company is also heading towards much stronger profitability as well. We see the contribution margin is looking about 45% in Q2. Whereas for the overall year, they expect about 48% in the contribution margin. That seems like they're okay on that part. It stays in line with the first quarter. So they had a contribution margin of 47% for the first quarter. And then 45% in the second quarter. And they're looking overall for the year is 48%. So in terms of contribution margin, it looks like they're going to do better. I feel like they're slowing growth down to focus more on profitability. That looks like the whole idea. But it's hard to pinpoint it in exactly. But it's definitely got the market spooked between lower conversion, slow growth, negative cash flows. But overall, they've got cash in the bank, so it's not a big problem. And a slowing growth to focus a bit more on profitability. So overall, I think the company is all right. But yeah, of course, price is going to be down a lot. And it's not an immediately screaming buy. It's just more one of the ones that are just more. It's a volatile stock. It's a volatile market. Like, things are being re-rated to an extent that basically they're viewing the company and looking at more on the profit side rather than the growth side, which is the growth is still pretty good at 50%. But I think the market is interpreting that the growth seems to be dropping off quite fast. But also you have to remember that Upstart's model is quite different from other traditional models where every time they sign up a bank, the growth jumps quite a bit. But we could also be looking at the situation that, hey, overall, market's not that confident in the consumer lending side, where loans are made, and with a recession coming up and inflation being strong and interest rates up, then perhaps it's not a good environment, and it doesn't kind of inspire confidence. So that's kind of how I'm seeing it anyway. Let me know what your thoughts are, and we'll probably have to see how things go tomorrow when it opens. But yeah, I'm quite, I'm quite surprised how much it's dropped. But I can also see why, But it's quite shocking in that sense. That's the market right now. Not too nice to be in right now in the current market. Until then, let me know what your thoughts are. If you've got any questions, post below. Until then, good luck investing.